Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this is your weekend edition for the first day of September. And this is 2023, September 1st. All right, as we look at the markets, we had the jobs report, and it's one of these strange reports. I can make bearish arguments, I can make bullish arguments. Not an argument that the stock market should have been sharply higher today, but it was at points. And at the end of the day, it didn't do so bad. It held on. Only one of the indices were lower. The others were there. Look at how the dollar, though, has rallied back. That's a big headwind, and I am surprised that even gold was able to withstand that, so I give credit to that. There's a change that's taken place, though. The gold-silver ratio has now gone the other way. So silver is losing a pretty good clip now to the gold market. I look for platinum to be in trouble, too. I think you're up at an area where that can have its own share of problems. Energy markets, I just talked to you that I thought we were going towards 90, and the Brent, we're $1 away from the high. So the idea of the call wasn't a real bad one. Now, bonds and notes, look at how much lower they are today. So this is where you've got the two parts, the Jekyll and Hyde of this jobs report. Let's understand a couple of things. Number one, yellow freight out of business, 37,000 workers. I don't know how many writers and actors and sub-companies under them are out of business, but it's a lot. We have coming right in front of us the UAW threatening GM, Stellantis, and Ford. Who knows where that's going to go, or if they're going to attack some of the sub-carriers, people that supply them with things. They haven't let out their hands what they want to do, but the demands are crazy. They're, let's take your salary and give you 46%. Let's go to 32 hours. As I said before, you ask for the moon to start, and then reality starts creeping back in as to what it is, and you get a better deal. But as these strikes drag on, and by the way, now the flight attendants at some of the airlines are picketing and they want to go out, this will come home to roost. And what I'm looking at and didn't understand and still don't understand is why everybody's applauding the increase that is still going on in wages. Yes, it is not the amount that it was. It's not a 5% increase. It's now a much smaller increase, but it's still an increase that's important. I don't want to show that right now. We'll come back to that. That's, I swear to you, an accident. So as I'm looking at what this is, I'm going, okay, I still see wages going up. We added 187,000 jobs, and the marketplace decided that the big important part was we were overstated in jobs for June and July by 110,000. Okay, I buy that. So now the question is, we didn't add as many, but wage prices are still there. We got a lot of strikes right in front of us. They will get resolved with higher wages. They're not going to go on indefinitely. All of those unions that are striking will end up with more money at the end of the day, and that's going to come in and have to play itself out. What did the Fed look at, and how is the market going to think the Fed looks at this? I see both sides of the argument. One part, you can say, between the JOLTS report, ADP, Challenger Gray, we're seeing a slowdown in hiring. We expect that. It's also seasonality. The summer's ending. Fall is September 23rd. The outdoor facilities in a large swath of America start closing down by the end of October. People that were there, and that's why the temporary help numbers, you saw people being let go from that. It all fits in. I like that. There's another thing here that has to be done. The Biden administration, and you should be talking to your congressman, since they have such a terrible policy at the border, and since all these people have come in, we as a country can't afford to support them. FEMA's running out of money now. Did you read that? FEMA has been hit disaster upon disaster. You see it, I see it. It's like, is it a tornado? Is it a storm? Is it Maui? Is it Florida? Is it going to be something else next? Only the beginning of the hurricane season. We have a budget that has to be resolved. That's coming up this month as well. Why doesn't the Biden administration allow the states, like we're dying here, I give our mayor credit. He wants the federal government to allow these people to get to work. We're taking over all these schools. We're taking over buildings that are just vacant. These people can't work. They want to work. Let them go to work. You want to see how you take down wages? You put this workforce in there. They want a job at any number practically. Boom. That changes the labor force game. I am no politician, and you couldn't get me involved in politics. But the obvious is the obvious. And this is craziness as to why it isn't. I know the mayors want it, the governors want it of many states, the states that declared themselves sanctuary, the cities, sanctuary cities. Who's crying the loudest? We are. Chicago's sanctuary city. And now you got what you wanted. Let them all come. Don't push them out. Keep them here. How do you pay for it? That's what you're dealing with. So I bring this back into this because it's an obvious problem that we're having, and we're not dropping salaries fast enough. But I have a whole group of people. I got 13,000 people in Chicago. Let's assume half are males, able-bodied. There'll be more rushing here if we could get them temporary work permits. They'll be paying taxes. They'll make it onto the payrolls. They'll lower, you heard what I just said, the price pressure on hourly labor. And they'll take the jobs that a lot of people don't want. You know that, I know that, the dishwashers, the servers, whatever it is, they're eager to work and make a better life for themselves. Wake up, America. Okay. So when we come to the S&P, you can see how the market is flattened out when we go to a monthly chart. This is the first day of the month, by the way. For the month, we should take a look possibly at this. How did the market do last month? Let's get to that. For the month, it was down 2%. Now, how does the month of September stack up? Typically, a bear market. Typically. That doesn't mean it has to be. I wish I could tell you, hey, past performance is a guarantee of what's going to happen. Nobody can make that statement. If they do, you're dealing with an idiot. But what you do know is there's a tendency for the market to break. You've now had a big rally the past week. You've erased a lot of the what? A lot of the decline that you had in the month of August, and now you've gotten yourself up and you're in overbought territory in many areas. You're prime for a market that could slip back here. If it slips back on the weekly chart, then I'm going to look again for that 4,400 level to be the area that it goes to. When we take a look at the swing line, we have a pattern of a higher high, a lower low. You can see in the month, this is how you started out. You made a nice recovery, and now the market's got to decide what's it going to do next right here. In terms of the support, if the market were to get underneath right here, the 4350 area on a weekly basis, that would turn the trend down. You'd have lower highs wherever this ends up, as long as it's not over 4634, a lower low, opening the door for 4207, and wherever the Bollinger Band is. This number is going to climb up when we reopen, and it's going to do that by, let's see, it was 3896, and let's see what it is, no, it isn't. I'm going to do this again. I said that wrong. It's 4111, and the week before, it was, let me get this right, here we go, 4085. So it's moving 30 points at a time, all right? So that will bring it up to 4140. That's not too far from 4207. So that's the zone if, I want to use this word in the strongest way I know how, if the market decides to break. Is there anything bullish on the chart? Well, the bias is up since you're over the 18-week, but you don't have the pattern of higher highs, higher lows. It's easier to go bearish because you can easily end up with lower high and lower low. You cannot in any manner this week, other than some crazy outside week where you don't take that out, you come up and then you go to, I don't see how you can do it. You can't end up with a buy signal. You can end up with a sell signal potentially, and with momentum already turning down, that could feed on itself if it happened. In the Dow, little different story. You got higher lows, higher highs. You are correcting, present tense, an overbought condition. 72 reading, any number over 70, daily chart, weekly chart is an overbought condition. NASDAQ, you have a market here with readings that are 60s, not overbought, but also not in a buy configuration. Lower highs, lower lows. We had a correction when we lost the embedded reading. Should have gone down to the 18-week average. It did it. And now to get a new signal on a buy, you can't. But you can get a sell if you were to take out 14,609.50, and it would give you a target down here. So that's the make-believe if it happens. In the Russell, the market came down and held nicely. The first challenge of this light gray line, which is the 200-week moving average of closes, it's being held back by the 100. We got over the 100 here, and generally the first test of that is false, generally. And that's what happened. You came down. But if it wants to be real, you go up and challenge it. I don't know if you can keep counting that as a resistance point in the price, but I can in the Bollinger Band. So I'd still be looking for that to be a resistance zone. How easy is a sell target? Real easy. If the market were to get underneath, were to do this, 1832.80, I could have lower highs, then lower lows, under everything, not overbought, pointing the way down here. So the possibilities are there, easier for the sell than the buy. We then get to the bond market, and you're locking in a bear trend. Bear trend means what? When you embed in the slow stochastics, let's see if it embedded, both numbers are under 20. Last week, both numbers under 20. The week before, under 20. The week before, not. You just embedded. So until the red line closes over 21, and that number's 1830, close over 21, then I think more short covering right up to wherever the 18-week average is. Until that occurs, the bears have control. They're selling the rallies, looking for a retest of the Bollinger Band. I'm going to stop here for 1 second because the Labor Day sale, by the time I get back with you on Tuesday, will have been over. I want you to be able to take advantage of this sale. It's 40% off all of my charting courses. That's a pretty big price break. If you want the yearly research, which is the morning subscriber videos for both the ETFs, the futures, there's a combo, there's a full research package. When you go to the website, it's all explained there at iraepstein.com, either under education or research, or take your cursor, move it up here. That'll take you to the same place. Got it? Just go on the website. We have a cart. You can put items in the cart, and away you go. It's been a highly successful sale. I appreciate it. I thank you, but you got a good deal. You're not getting 40 off again. Not this year. I don't know. I can't speak beyond that, but I can tell you what I'm doing this year. When we take a look now at the 10-year notes, it's the same story, or is it? Did we embed? Both numbers are under 20. Both numbers are under 20. What about the week before? Just by the hair of its chinny, chin, chin. It's embedded. Same game plan. If the red line closes over 21 by Friday, then I look for the market to come back up here. If it can't, first off, I think the pros will sell into this, but they'll look to see what these numbers are doing as they do so during the week, and I think they'll be looking to get back to the 108 plus area. In the dollar index, this is still in an uptrend. So the marketplace, not IRA, is saying interest rates are still locked in for higher numbers. The marketplace has still got the dollar in an uptrend. That sounds to me like the market is not convinced the Fed has to go into a full pause. That's where the money is on Friday. That's how you have to, at least I have to look at that. When I come to the euro, this still looks bearish. I mean, lower highs, lower lows. Yes, we're at the zone we have been fighting. If it gives ground, then you open the door of the 106.45 area. The market is not, or is it oversold? It is, IS. It is oversold. You have a reading under 30. Again, this is all in the courses. So not eager to go short in a market that's oversold. In the Canadian dollar, there's a lot of word that the way their economy is going, that their central bank wants to go on hold. Now, something interesting happened. They have been fast-tracking, and I'm talking Canada and India, have been fast-tracking a trade deal between the two. All of a sudden today, out of nowhere, right in front of the G20 meeting, they put a pause to that. I don't know what's going on. Is it too fast? Are things not going the way both countries want? Is it Canada's doing? There's mixed stories coming out, but when you hear that, your horn should go up there. What's going on? In the Japanese yen, you have a fully embedded reading. The long-term chart is still bearish. I don't see the Bank of Japan doing anything except threatening to intervene if it becomes unruly on the downside, but I am not convinced that they're against the yen falling a bit more. I don't see that. Now, you're at the Bollinger Band. Do you ever sell a Bollinger Band? No. If you're embedded, you're waiting for a good rally to get short, not there. And I teach what a good rally is in the charting course. In Bitcoin, lower highs, lower lows. What the heck happened here? This is the week where probably the best news in years has happened in terms of Grayscale getting a huge ETF victory. And the market's down for the week, $300, and still in a downtrend. Oversold, admittedly. Confusion. Then we get to the Brent, the differential between the two dropping apart. That means our energy is catching up with Brent. That's what it means. And if you look here, now you're into an area right now where you've got resistance. Trying to get through the Bollinger Band, the 100-day average, and just running, you bet on that. I wouldn't do that. I'm not bearish, but I would want to lift money off the table, and I put my money where my mouth is. Today in the ETF and the OIH, I was telling my subscribers who have owned the OIH, now, today, market, you got to take half the position off. Got lucky. I have losers too. Believe me, I have losers. Not big ones, thank God, but could there be? You never know. You wake up in the morning, you never know what's going to be there. You do your darn best. Higher lows, higher highs, right into the resistance? No, I'd be telling you take money off the table here. Use this rally to do that, and gasoline just turned bearish. That's good news, though. We want to see that. That helps. But if it's turning bearish, I'll bet you that heating oil's turning bullish. So the markets are getting into the switchover right now for the winter grades of everything. You put it together, you get a game plan. If you're interested in teaching yourself and learning, interested in seeing in the mornings, first thing, what I'm telling my subscribers, buy here, sell there, do this, move your cursor up here, go to the website, iraepstein.com, under education and or research. I'm Ira. You won't have to hear about the sale anytime soon again after this. You have yourself a great holiday. I'll see you all Tuesday.